Hey guys, Aldrich here. Welcome to another video. So for this video, I would like to give you guys a market update on what's really going on in the markets today. I know there were a lot of things going on for the past few weeks. For example, like the Trump tariffs and the trade war with the US against China and so on and so forth. So in this video, I'll be sharing with you my thoughts on what's going on in the markets. So just a disclaimer, this video is for information purposes only and should not be misconstrued as investing or financial advice. And you have to remember that at the end of the day, you have to do your own research before you invest money into the markets. Okay? So moving forward, when I create these kinds of videos, right, I want to always start with this slide over here, right? The 40-70 Powell rule introduced by Colin Powell. And for me, this is one way for us to combat analysis paralysis, especially during a time full of uncertainties. So he mentions that once the information that you have gathered is within the 40 to 70% range, you might as well just go with your gut, right? So don't wait until you have enough facts to be 100% sure, because by then it is almost always too late. So for me, what this is saying is that we can't really be 100% sure, because by then we would fail to take advantage of whatever opportunity is being presented to us in the present. Okay, so there must be a balance between how much information you would collect as well as how you would act on that information. Okay, so the market update today is entitled, Are We Out of the Woods? Okay, so this is the general flow of the video that you're currently watching, right? So first, I'll be discussing Trump retracting intention to fire Fed Chair Jerome Powell and its possible implications. Second, Trump tariff reprieve, is it really underway, right? Third, I will be showing some indicators that I think are showing positive signs. And finally, my thoughts on the current state of things in the market. Okay, so are we out of the woods? So just to give you an overview of what happened last week, so the markets were up by single digits, right? So for example, the S&P was up by around 5% for the week, the Nasdaq up by around 6%, the Dow up by 2%, and the Russell 2000 up by 4%. So Russell 2000, if you guys aren't familiar, is the index for small cap stocks. Okay. So first, Trump has recently mentioned that he has no intention to fire Jerome Powell, but it's kind of weird because in the past he's really adamant about firing Fed Chair Jerome Powell, because he's been saying that, oh, Jerome Powell does not want to lower interest rates yet, and he's way too slow, right? So why does Trump want to lower interest rates in the first place? Well, he wants to bolster the US economy by reducing interest rates. And what this means is that um, the borrowing costs that consumers and businesses have to pay would be lower, and as a result, they would be more than willing to take on more debt and to to finance their different business activities, or for consumers to invest in the stock market, for example. But Jerome Powell knows the risks of lowering interest rates, right? He knows that if he does this, then it may bolster inflation, right? And we know that when inflation goes up to levels that can't be controlled, this would mean bad things about the markets, right? So okay, why does Trump not, or why did Trump retracted retract his intention to fire Jerome Powell. He did not really mention why, but I think, well, this is just my guess, okay? I think the reason why he did that is probably because Fed Chair Jerome Powell's term as the um, chairman of the central bank is almost coming to an end because his term is only until May 26th. So, no, it's just a month away. Maybe Trump wants to, let it play out and wait until Jerome Powell's term finally ends. Okay. Right. So for the second point for today, right, Trump tariff reprieve isn't really underway. So I'll be getting into the details later, but I first want to open this section with this article that I read recently from Michelle Gelfand, um, who is a psychology professor, if I'm not mistaken, in the Stanford GSB, right? So she mentions here that it's time to abandon Trump's flawed negotiation playbook. She says that negotiators with a win lose mindset often assume that unpredictability gives them an edge. In fact, it just creates confusion, alienates partners, and risks destructive escalation. Hence, Trump's erratic tariff policies have triggered counter tariffs, raised fears of a long term recession, and undermined America's credibility. Okay, so what what exactly is Trump's negotiation playbook? So I am viewing that in this process. Okay, so first he would provoke his enemies. So in this case, the tariffs that he has, imposed on all countries, right? Then next, he would let the situation play out and see how his enemies would react to his provocation. And finally, is that when, the situation has tilted towards his favor, then he would retract his provocation and finally reach into agreements with his enemies. So that's how I'm viewing his playbook. So, what has happened so far after Liberation Day or when Trump, you know, started imposing these tariffs to the countries, to different countries around the world? So let's see. So for this one, I'm just looking at the perspective between US and China, since of course China is arguably, you know, the superpower that is about to take over the US dominance. So okay, so on April 5, there was a 10% universal tariffs which went into effect, putting China's tariff rate at 30%. Then on April 7, Trump threatened China with a 50% tariff in addition to 34% reciprocal tariff if China did not back off. Afterwards, on April 9, China announced an 84% retaliatory tariff on the US imports, and immediately Trump answers back with a 145% tariff on all Chinese imports. On the same day, he also announced that there would be a 90-day pause on reciprocal tariffs to all countries aside except China. On April 11, China increases retaliatory tariffs on US imports to 125%. Then, on April 18, Trump claims to be in a negotiation status with China. However, China denies such claims. And just today, on April 28th, US Treasury Secretary Scott Bessent did not support Trump's claims that he had a meeting with Chinese officials like Xi Jinping, and he also did not hear from Trump that he really did have a meeting with President Xi Jinping. So we can see that there is still some uncertainty when it comes to the tariff situation and the trade war, possible trade war between US and China, given these claims. Okay, so next would be some indicators that I am seeing that could possibly signal a rebound of the correction that is being experienced today in the market. So we can see here on this chart the volatility index, or the VIX, wherein if it the higher the VIX, that means there is more fear in the market, and the lower, of course, it implies that you know people are willing to participate in risk assets such as stocks. So we can see that historically, when the VIX reaches the 50 levels or above, then there is tendency for stock prices to spiral downwards. However, if it goes below the 20 levels, then historically the stock market rises and rallies, right? So today we are in that situation, right? There's still some uncertainty, but then again on April 18th, right, Trump claimed on social media that, oh, I already met with Xi Jinping and I'm currently in this negotiation with China's president. Hopefully we would be in good terms from the agreements and stuff like that. But then again, with the recent update, we are still not yet sure of what's going on with their agreements, right, with China. So this could pose some risks in the market. So, which is why moving forward, we can't surely say that that the uncertainty in the market has finally subsided. Another factor that could show or could imply that maybe the markets could rally is gold prices correcting or falling down. So for me, I think there are two reasons why gold prices are starting to experience some sell-offs. So the first is only a profit taking from those gold investors who invested in this commodity earlier on. So when we look at the chart from a bigger picture, we can see that it came up from this nice technical pattern, the cup with handle, which formed around, you know, which was formed for around 10 years, and we can see that gold has started this secular bull market, right? And in 2022, we also saw that central banks around the world have been accumulating gold into their treasuries, and that may also explain the reason why gold has been rallying. So gold prices since then have has doubled, right? Coming from around $1,500 to currently around $3,000, right? And the second reason why gold is experiencing some short-term correction is maybe people are pricing in the fact that uncertainty has somewhat came down because of what happened on April 18 from Trump's announcement. So this could imply also that people are slowly shifting their money towards riskier assets such as stocks. So that is also one factor that I think explains the reason why gold is correcting right now. However, I think we are still in the early innings of this situation. And we can see here from this chart from Bloomberg that the volume of cargo is down about 40% from this year's peak. And this is one of the effects that Trump's tariffs would have on different businesses around the world. So this implies risk of supply shortages, which may be experienced by businesses and consumers. So for businesses, because of the tariffs imposed by Trump and the uncertainty in the economy, these big businesses, these leaders would experience that delay in their decision making because again, they're not so sure whether or not they should invest heavily in their capex right now or to pile up inventory before the 90-day pause would come to an end. So they really don't know how to go about this situation right now because of the uncertainty. And the effects of tariffs would also affect consumers because, again, as we all know, tariffs are the additional tax um, being imposed on importers. And what importers would do is that they would put those costs that they incur from the tariffs, and they would pass it on to the consumers through the prices of the goods that they sell. So, because of increased prices, then that would mean that consumers would not be willing to spend more on these goods, right? Their propensity to consume would decrease. And as a result, it would lead to a slowdown in the economy. So, another thing that people are, you know, the way people perceive current situation is that it is being linked with the Great Depression in the 1930s, right? So in this chart, we can see that from 1922 to 1923 up until 1928, the interest rates of the Fed is being hiked because during that time we know that, no, just to give a backstory, in the 1920s it was called the Roaring Twenties because, you know, economic conditions were so good, um, and because of that, inflation has also increased to the point where the central bank at the time had to combat it through hiking interest rates. So after that, of course, with the cycle of the with the Fed funds interest rate cycles, we should know that after the Fed hikes rates, there would come a time that they would pause and eventually they would cut rates. And most of the time, when they are cutting interest rates, that is when recession happens. And we can see that here with the Great Depression. Okay, so when they cut down interest rates, that is when that recession, that decline in the Dow Jones, for example, occurred. Okay, so during that time as well, different officials said that, okay, we need to find a solution to address the problems being experienced from the Great Depression. And one thing that they did that is similar to what is happening to today is when it comes to tariffs. So in 1930, around 1930, the Smoot-Hawley Tariff Act was signed into law, right? So basically, this law states that all imports to the U.S. would have a tariff between 40 to 60%, which prompted retaliatory tariffs from trading partners all around the world. And as a result, global trade collapsed by about 66% between 1929 and 1934, deepening the depression. And we can see that it was only until 1934 where, you know, US equities started to bounce back from that recession that they experienced. So other people have also been linking the current situation with Trump's first presidency. And the the way he imposed tariffs is also not new. It's not a new phenomena, right? In 2018, he also imposed tariffs on Chinese imports at around, I think, 20 to 30%, right? And as a result, that also led to economic slowdown, okay? And we experienced a bear market from 2018 to 2019, and then it it was even worse when the pandemic hit the economy, right? So the difference only with Trump's presidency today and in the past was the magnitude of the tariffs. So, as I mentioned earlier, in 2018, the tariffs that he imposed were only around 20 to 30% on Chinese imports. But today, guess what? He is imposing triple digit tariffs. on Chinese imports. So for me, I think the situation may become even worse, like in the succeeding months. So my final thoughts, before ending this video, is that I want you to not get carried away by the rally that we experienced last week, because there's still some uncertainty when it comes to Trump's policies and also the trade war between the US and China. So for me personally, what I am doing right now is that I'm not heavily invested into the stock market. Perhaps only around 5 to 10% of my portfolio is in stocks, and only around 1 to 2% in crypto actually. But a large portion of my portfolio is still in cash. And I believe that when you when you have a larger portion of your portfolio in cash, you are given a great opportunity to have a clearer mind, to not get, to not experience FOMO because of what's happening, right? And there's this saying in the markets that, cash is king. So you have to defend yourself, especially in times of uncertainty. And it is also a great time to do your homework, to research about what's going on in the markets, in the economy as a whole, and referring back to, you know, I think it was the third slide that I presented, right? When it comes to the 40-70 rule, right? We always have to keep in mind that we will never be 100% certain with what's going on. So, we have to act accordingly to what we are seeing. And there are times where we can be contrarians in the markets, right? So we don't necessarily have to 100% gather all the necessary information before we take advantage of opportunities. But what matters is that when we think an opportunity presents itself right now, then with all the current information we have, all the current information we know, we must act on that opportunity, because if we do not do that, then it will just slip away from us. So that's it, guys, for this market update. I hope you learned a lot from this. I know it may be, you know, quite heavy for especially those who are new to the markets. And also, if you are interested in knowing my background, feel free to click the video over here, which wherein I showed my investing and trading journey so far in the markets, right? So thank you guys for watching, and see you in the next video. Bye bye.